Good morning and welcome to our weekly trading tips. As always, these tips are based on the CFTC Commitment of Traders report. It is the 46th report for this year and it is dated on information provided for the 12th of November. None of our positions have changed. We still maintain our interest in our current pairs, which will be shown at the end of our discussion about the currencies that we recommend. So we'll get on with it. Our first currency that we'll look at this week is the New Zealand dollar once again. We still hold two positions denominated in the New Zealand dollar. You can see that the commercials have added 4,500 short contracts to their position and 2,000 long contracts, resulting in a net 2,500 contracts to the short side. Even though this is a reasonably significant change in terms of their small overall contract size, you often see this because the commercials are, as you know, hedges, that when the currency has turned at support or resistance, they will often add into the contract. You can also see that the non-commercial speculators have added 2,374 contracts to the long side, so they might be developing an interest in this. If you look at our spreadsheet above, you can see that the commercials went greater than 70% net long for the New Zealand dollar around September the 17th last year. This will become more important when we show you charts at the end of this discussion. The next currency that we will be looking at is, again, the Canadian dollar. You can see from the positions above that the commercials have significantly changed their long and short positions. They have dropped 10,000 short contracts and added 6,000 long contracts. And you can see that open interest has declined by 10,000 contracts in this currency instrument. You can see that the speculators, the non-commercials, have dropped 16,000 contracts overall, with 14,000 coming from the long side and 2,000 from the short side. This change in commercial positions can simply be non-commercial speculators being hit on stop, and even though it is a large change, it is not a cause for alarm from our point of view, as we can see that there are still nearly 70% of their contracts to the short side. So this is quite encouraging. We also see a little upside for the Canadian dollar and believe that it has reached its peak. Our first chart this week is the New Zealand dollar US dollar. I'd like to draw your attention to the arrowed position on the 16th of September. This shows when the commercials went greater than 70% long, and they have held this position through to now with slight unloading only. I think this is significant. It is at a weekly resistance level, and you can see that the currency pair has gone north. We believe there's still a lot more room for this currency to increase in value, and we maintain our interest in this currency even though we have a greater than 400 pip profit thus far in this pair. We are not bailing out. The next currency pair is the New Zealand dollar, the Canadian dollar. As you can see, it's nearly a mirror image of the New Zealand dollar, US dollar, and we're trading both these pairs. Again, if you look at the chart, you can see the arrowed 16th of September when the commercials went greater than 70% long and have basically held their position. There has been a slight reaction, although it is essentially trading in a range. We believe it will break out of this range to the north side and have not abandoned our position, even though we have a small profit of 160 pips. We don't believe it is time yet to bail out, although of course taking profit is in the hands of the individual. The final currency we'd like to look at is the Swiss franc. This is a safe haven, and you can also look at the Japanese yen, which is doing a similar thing in terms of commercial positions. As you can see, the commercials are gradually increasing their long positions in the Swiss franc. They're now at 67.6% of their positions as long positions. In our very limited view of this currency, the commercials really need to be greater than 75% in our view to create a trading signal for us. But still, this is a currency well worth watching. You can also see, if you look at the Japanese yen, that the commercials are also slowly increasing their long positions in the yen. Both these currencies tend to be coupled and both considered safe havens, so you might think of the Swiss franc as a slower moving version of the yen. We don't think it's time to trade these currencies yet, but they're very much worth keeping an eye on. This is a weekly chart of the US dollar Swiss franc. As you can see, it's tightly mid-range, although there has been some move to the downside in favour of the Swiss franc. This is not a position we would trade, but absolutely worth keeping an eye on. Our next currency pair is the Canadian dollar and the Swiss franc. We discussed this last week. It is trading in mid-range. As you can see, last week the pair moved to the downside in favour of the Swiss franc, as our pair index suggested. Once again, we did not trade this pair, but any person trading this as a swing position would have made a small profit. That's basically it for this week. We'd like to thank everybody for joining us, and we look forward to being with you again next week. If you like our videos, please subscribe. It seems to be fairly standard advice on YouTube. We maintain our interest in both our trades. We have not abandoned them, but of course profit taking is in the hands of the individual, and some people might be very happy with a 500 to 600 pip profit. Once again, many thanks, and we'll be with you again next week.